Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and June 27th here. We got a couple economic news releases to go over today, so we'll jump right into it. We'll start off with the Case-Shiller home price. This index gives us the average or price index of the 20 largest markets here in the U.S. So back in March, we had a 5.9% increase or jump up in from year over year. Forecast was supposed to be for April to April, 5.9, and it dipped a little bit to 5.7. Of course, a lot of this is due to lack of inventory. We don't got a lot of inventory out there, so if we don't have much inventory and we can't get any homes sold, of course that will kind of bring it down a little bit. Consumer confidence for the month of June. So we had 117.6. These are great numbers here. We thought it would kind of dip a little bit in the month of June. And it went up to 118.9. So again, people are feeling a lot more comfortable where things are at with the economy and everything else. So this is good news with this high of a number here. So let's take a look here at the headline news. Stock market this very second is down. Now the Dow's been kind of tweaking back and forth a little bit this morning, kind of poking its head just in the positive territory, then going to negative. I put down, so you can almost say mixed almost here too, but at the very moment I did this, it was down slightly. Now, part of this is we got some comments by the ECB's Draghi. He's kind of their Fed chief over there, and he basically said that deflation is out the door, so there's really no concern about deflation. Then he basically put a inflation. Basically said that would be temporary blip, kind of like what our Fed said, that there's a temporary blip right now. They think the low inflation right now is kind of temporary, and it'll kind of pick up. So he's kind of saying the same thing along that line. And then Fed, there's going to be a few Fed members, including Janet Yellen, will be speaking later today. That definitely could, move the markets because everybody's kind of waiting to hear what they have to say. There's been a lot of concerns, especially on the tech stocks, how much they've gone up, that maybe they may be overvalued or such. So there's a lot of concerns that before they push it up any further, they want to kind of see where things are at, kind of feel a little bit more comfortable where things are moving. So let's take a look at the bond market, see how that's doing. So we went from way up here to way down here. So we dropped about 22 basis points, which translates to a higher interest rate today. So yes, it did go up a little bit today. But so far we are just above the 22-day moving average, which is important because this becomes our first line of support. Now we did test it earlier, as you can tell, with these lines here, or straws in the candle wick, or the wick in the candle wicks here, So right now we're just resting above the 20 or 200-day moving average. So again, be a little cautious. We want to try to hold that and try to remain above that. But the news basically from what Draghi said and then potentially what the Fed says could, that's what's kind of dragging the bond market down a bit on there. And then, of course, stock market is kind of feeling a little bit of effects too, but they're kind of waiting and seeing what the Fed members are saying. So they're kind of holding off. So that could, again, after the Fed speaks later today, you can see a lot more changes coming ahead here. So stay tuned. Speaking of staying tuned, just come over to Twitter. You can find me at Mike Bjork here on Twitter, and then you'll get more update on the news, see if there's any improvement or any movement during the rest of the day here. Meanwhile, also, if you guys are in the market for a mortgage, please feel free to contact me. I can help you guys out. We do. I'm a loan officer, and I help out people with their pre-approvals and purchases of properties to people who are refinancing, from people who are looking to go from a 30-year to a 15-year fixed, to people who have adjustables currently and want to get into a fixed. Also, people who are taking money out of the equity of the property for various reasons. I have people going from rehabbing or renovating their homes to people who are going into investors who want to buy more properties or debt consolidation. So those are all different avenues that people are doing with refinances. So please feel free to reach out if you'd like to have some assistance with that. Have a great day. Thanks so much for watching. I look forward to seeing you guys tomorrow. Bye.